Straseske, and this is my book, Home Run Financial Planning. Cover all your key financial bases and align your finances with your goals and values. Make sure your finances are working for you the way that you want them to work for you, nobody else. You can get a free copy. Go to www.redoakfg for financialgroup.com. Get a copy today. It won't cost you anything. I'll mail it out to you for free. All right. We're going to look at the overall picture of the equities markets, and then we're going to get into this week's operating plan. So first things first, when we're looking at the overall markets, we look at 12-month momentum. And we're measuring the S&P 500 versus the MSCI All World ex-USA Index and U.S. Treasuries, the shorter-term Treasuries. Right now, the U.S. markets are still greatly outpacing the MSCI All World ex-USA Index and U.S. Treasuries. And so what that tells us is we want to focus on U.S. markets. Since we want to focus on U.S. markets, we're looking at large cap versus small cap, and then growth versus value. Interesting week last week as far as small versus large cap, because large cap started to outpace small cap. We haven't seen that in a while, and it hasn't closed out the month yet. We wait for the end of the month to get the trigger, but right now, large cap has started to outpace small cap. So at the end of the month, if it closes this way, then we will rotate out of small caps and we'll get into the large caps. Now, when we look at growth versus value, there is no comparison. It is not even close. Growth is absolutely killing value. So we want to continue to focus on growth. When we look at our barometer, which adds all this up together and tells us whether or not we want to be in a risk on or a risk off stance, we still want to be in a risk on stance. So we might be in the midst of a correction right here, not this past week, but coming into this week. Don't know that for sure. I'm going to get into that when I'm going to show you an extra chart of breadth after we look at the S&P 500. But right now we're in a risk on stance on a weekly time frame, and frankly the market is bullish right now. So let's look at a chart of the S&P 500. I'll show you that, and then I also want to show you a chart of breadth as well before we get into this week's operating plan. And here's a chart of the S&P 500. Good week for the bulls, up 0.85% for the week. So looks good there. A few things that I want to point out. Number one, we're still holding above support that was broken a few weeks ago. And so as long as we're above there, that looks good. And we're still within the bull channel, so that looks good. Frankly, we're going to be bullish until one of three things happen and at least change our stance from bullish to neutral. Number one, if we have a break to the downside of this bull channel right here. So if prices drift down and we break the bull channel, that would be a sign of concern. Secondly, if we fall back into the trading range. So if we have a large sell-off this week and we fall below support, that would be a cause for concern. And then thirdly, which would be the opposite, a large run to the upside, and we have a break above this blue channel line right here, that would also be a sign of concern, because that would be euphoric in nature. And here's an example of that in the past. You can see in the S&P 500, we were running, everything looks good, well within the trading range, the channel, and boom, we get a shot to the upside, and then within many weeks, we had a rather large sell-off. So that's just a sign of euphoria, and this one lasted longer than a lot of them do. And so if we were in fact looking, if that does happen, we'll just be very cautious at that time, because whenever they start to get vertical like this, that is a sign of euphoria. Interesting week this week. I want to show you a chart of breadth, and so let's get into that. Here's a look at market breadth. Breadth is simply the number of stocks advancing or declining within an index. So when we look at this, what you're basically looking for when you look at breadth versus an index is whether or not the number of stocks advancing with the index is increasing or decreasing. A healthy market typically has most of the stocks participating in the advance of the index. And sometimes you see a discrepancy because of the way that the indexes are calculated. So for example, right here in the S&P 500, we've got a negative divergence. And what that means is that we had an increase in the S&P 500 past this previous high, and we did not have as many stocks participate in that advance. So what this is simply telling us is that it is a warning sign that the market is actually weaker than where it was back here about a month ago. So that it doesn't mean that the market's going to fall. It is just a warning sign. And if you go back here and look, it doesn't take too much to realize that when some of these negative divergences we actually did have a decline in price. So that's one of the things we're going to be looking for this week. Doesn't mean we're going to get a decline in price, but it certainly wouldn't be a surprise according to Brett. When we look at our current positions in the current portfolio, first things first, US equities. All of those are bullish in nature. Most of them are making new highs or made new highs in the past few weeks, and so it looks good there. We did get a sell signal on some of them, but overall, they still look bullish when we look at the time frame that we're looking at. Secondly, our US Treasury position. That thing is down on support again. It is right there on support. We're pretty close to getting stopped out. But I'll tell you what, every time I think it's going to bust through support and we're going to get stopped out, the thing bounces to the upside. The thing is that the more something hits support, the more likely it is to fail. And so if I had to guess this week if we're going to get stopped out of our US Treasury position, it would be yes. Don't know for sure, but we're going to be watching it really closely to see if we get that sell trigger. Secondly, our commodities position. We've got two of them, natural gas and global wind and energy. Global wind and energy had a buy signal last week at the bottom of the trading range, and so that looks good right there. And secondly, on our natural gas position, we had a buy trigger last week, and so that's even more bullish. That's the kind of action that we like to see. They're still within the trading ranges, and so we want to see those get towards the top of that trading range and then bust out to the upside. We'll see. International positions don't have any of them. So overall, looks good. We're going to be watching the markets closely to see if we get a sell signal on the ones that, or sell trigger on the ones that we've got, and then get stopped out of treasuries. As far as adding new positions, don't plan on adding anything new. Only maybe adjust the stops up on some of the current positions to lower the risk of the overall risk of the portfolio. So with that, have a great week, and we'll talk to you next time.